Good morning, Paul Georgie from Allendale. It's June 17th, Friday morning. Well, we've got some short covering here in the grain markets overnight. We expect that will carry through here on the opening in the open outcry at 9:30. Some of the reasons we've got a weaker dollar, I think, is the main reason, and probably a risk-on type day by funds, as we've seen some of that yesterday in other commodities, but not necessarily in the grains. We've seen a lot of liquidation. Some of that liquidation because of open interest. Open interest was still large in the July contract. We're expecting open interest to be lower here today, and continuing to be more manageable open interest going into the first notice day, which is June 30th. So expect that to continue to weigh on the market, as there is some liquidation there. But short covering here after a sharp sell-off this week. July contract had a $1 sell-off in 5 sessions from the highs that we made last Thursday after the report. So believe me, the market has gone down enough for a week. Short-term recovery here is very likely. Some of the other news that we've got is the cash premium in the East is still very strong. That is expected to continue, as late planting there has got producers nervous about having a supply of corn to meet some of their needs or some of their sales that they made for the new crop. So they're very hesitant about selling old crop at this time. The something that we've been watching here closely is the old crop, new crop spread in the corn. We've seen the July contract under a lot of pressure this last week. It's getting down to a level now where it deserves to be watched. More research has focused on some spread trades there. It's worth calling us and getting some information on that. The another thing that happened yesterday was the ethanol bill in the Senate did pass. However, it's got a lot of hurdles to go through, and basically what it was is will be attached to another bill that is said and thought to likely not pass. So the ethanol situation, the subsidies, tax credits that's provided there, it's a matter of not if they're going to go away, it's when they're going to go away. They will go away automatically on December 31st. And many are saying, well, let's just let it work through the process. But the amount of money they can save by shutting it down early is what some of these senators and congressmen are looking at in order to get a budget here going forward. So that is the ethanol thing is a game that's or a pawn that's being used in the game of trying to get this budget settled in Washington. Other news in the wheat market, looks like there's going to be plenty of moisture in Europe and Russia that will help in the final stages of the winter wheat crops there, and certainly help the spring wheat crop. We still have got option expiration next Friday, and think that we'll see some adjusting here as we go into the weekend, and then beginning of the week ahead of that option expiration. First notice day on the 30th, and the June report coming out on the 30th. That is a key number. Another thing that more research is looking at here is a seasonal trade, is the buying wheat, selling soybeans. Just looked at some comparisons here this last week. December wheat contract, for instance, was down 72 cents from the close on Friday to the close yesterday. November soybeans down 31.5 cents during that same period of time. So it might be worth something to take a look at there. Oil World also reduced the EU crop, the rapeseed crop, and that could be construed as a little bit friendly here to the soybean complex. Dollar down hard here this morning, and that is providing some support to these grain markets and commodity markets in general. We're down about 50 to 55 cents as we speak. Basically on the Greece situation, that the EU has said, well, we're going to give them the next tranche of money here, even though they have shown some problems with the possible default. They're going to go ahead and provide that money, and we'll have to. That situation is certainly not going to go away here very shortly. The livestock trade, exciting trade there yesterday. Cash markets were several dollars higher, $2 to $3 higher in the south, 107, 108. North paid as high as 111, 112. Cutout values, however, were just slightly lower in the choice, higher in the select yesterday, which means that the packer margins, these huge margins that they had for several weeks, have now gone back to a break-even situation. So it's going to be important to get this beef market some legs under it, some support under it. We expect to see some better buying here as the 4th of July holiday approaches, some fill-in buying to support that market. In the hog trade, cutout values were lower there. Cash markets were still strong, and we expect to see some fill-in buying as well in the pork trade. However, the technicals may have met enough resistance here to give us a bit of a profit-taking sell-off. Another thing that's been noted from traders on the floor is that we've seen a lot of yesterday. We've seen a lot of cattle buying and hogs selling. We could see some more of that here today. So stay in touch with Allendale Research. We're going to try to keep you informed the best we can. If you got any questions, give us a call here at 800-262-7538. We wish you a very successful trading day. We'll talk to you Monday morning.